Welcome everybody. Welcome. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Welcome everybody. Tonight's topic is GoodBox, BadBox revisited. I would say over the past, I don't know, maybe year and a half, I've probably done half a dozen of these. I do them like once a quarter, where we revisit the whole box drawing issue, because that does come up quite a bit. By the way, just to clarify for everybody, I think everybody knows this, but I'll just state the obvious. When we refer to drawing the box, well, here, let's get over to some charts and take a look at it. Let's get over to some charts and take a look at our little friend. Hold on. Let's take a look at YM first. And you know what? Let me get everybody oriented before we get too deep into the heart of the matter here, because I see we have quite a few new folks and some visitors here. So let's just take a couple of seconds to talk about some of the basics so that we're all on the same page as we look at this. So what you're looking at here is the E-mini Dow. It's called YM is the instrument's tagline there, and we're trading the September contract. Most of you know, of course, we trade YM in the live trading room. We trade the Russell. We trade NASDAQ. We'll look at this shortly. And of course, everybody knows we trade crude oil. This is the Viper indicators. We use a 4-range chart to trade on. We have for many years now. And most prominent things, of course, that you can see on this chart are the background colors. Generally speaking, when the background is red and the market is stair-stepping down like you see here, this would have been late morning, mid to late morning today on YM, mini Dow. It's $5 a tick. That means each tick of movement here is $5, worth $5. Okay, so from 20 to 30, right here would be 10 times 5 or $50, right? Of course, in addition to that, we have the bar color scheme, which is red, blue, and yellow. We have the predictor, which is the swing levels. You can toggle that on and off like such. I'll leave it off for now. We have the swing levels. You can see them here identified. We have the stealth line, which is this sort of thick, chunky, sneaky looking line right here. And then, of course, the most prominent thing on the chart that we use very extensively is what we call the mid band and the surrounding bands. So you have 1, 2, 3, 4 bands above it, 1, 2, 3, 4 bands below it, and the big thick one in the middle is called the mid band. You hear that referred to in the live room quite a bit. So just to go over the most prevalent way that we like to trade, and just for simplicity's sake, I'm going to try to keep this discussion limited to two primary price actions in the market. One is going to be what we call trends, where the market is trending, and the other one is what we call range bound or sideways type conditions. So here to the left, you can see coming up on 8 o'clock this morning. In fact, let's go way back over here to this open of the market. I'm here in California. This is all Pacific time on the chart. 6:30 Pacific was here. This was the open of the market. So as I recall, in the pre-market, just before the market opened, we put a box on NASDAQ right here. Now, it's kind of a, for lack of a better term, at the open, it's almost kind of a crapshoot sometimes, in a sense that sometimes you'll get a lot of chop right at the open. The market will just go sideways, up and down, chop mind-numbingly in a range, and I know that drives a lot of everybody in here and a lot of traders crazy where it just sort of whips around the open. Now there's other cases like today where, for instance, you can see coming out of this region box here, and you would have been filled long on this candle right here if you drew the box like I draw it. This is a region box using our Object Trader tool. It's called OT. And Gary has done quite a bit of extensive training in the on whole multi-hour webinars dedicated to showing how to use that tool. So for simplicity's sake, I don't show OT over here, because what I try to concentrate in the webinars where I do some teaching is I want you to see the price action, because once you understand the price action, you can use the tool. The tool is enabling you to, see and take trades, but first you got to understand, our methodology. That being said, this was a good box. Now let's talk about good box and bad box, because shortly I'm going to have a quiz where we're going to start to look at various kinds of boxes. That will be different sizes of boxes, different locations of boxes. And you're going to notice that as the more you trade with us, that the region box is an integral part of what we do. It's a very important integral part. And so if you're going to be successful trading with us using the Viper tools, it's really, really important that this region, you get the region box down really well. So let's look at what the properties that make up a good region box are. The main one in terms of gauging whether it's a good box is the size of the box. So for instance, you can see here the top of this is located right here around, let's use round numbers, 17,830 roughly at the top of the box here, and the bottom of the box is located around 21, right down in here, 22. So how large is this box from top to bottom? Depending on how you drew it, anywhere from what, 8, 9 ticks, 10 ticks. This is a good size box. So just as a rule of thumb, to give you a sense, generally speaking, you're going to want your boxes to be at or around 10 to 12 ticks or less. Now the other thing that makes this an ideal condition for a region box is its location. We really, really like tightly wound region boxes sitting right on the midband. That's like our favorite. If you were to go into Wikipedia and outline one of our favorite trades of all time, that is it right there. You're looking at, the sweet spot of it right there. 8, 9 ticks box, top and bottom well defined, clean, easy to see, sitting right on the midband, and you're right, almost right on the open of the market where we expect a good burst of volatility. Most of you know there's volatility throughout the course of the day. It comes and goes, right? But for the first 30 to 90 minutes in the equity markets is when we're expecting a lot of that movement to occur. Okay? So that's an example of a good box. We got long here. As I recall, we took this in the room. I actually took this trade live, and I think we wrote it up. I took so many trades sort of later in the day, I can't remember what I did early. All right, let me talk so that was the entry on the box. Now you're going to hear. Let me just talk for a second to interject here real quick about this whole notion of tight versus loose stops. All right. And where they tend to be located. Okay, let me get this. Let me move this. Here, let me do this. Let me put the arrow out of the way here so we can talk about the stops a little bit. All right, so here was the run. Notice how, and I'm going to show this real quick, and I don't want to get too much off the good box, bad box thing, but since you got some trades set up here, let's just pause and talk about stops for a second. When you have a good move in a market, you're going to notice that this line that follows the outermost band up, see it? See this line right here? Notice how when the market pulls back, and notice how stealth follows it closely too. See the stealth line and this line inside the outermost band right here? Now when you here in the room, or you personally are trailing your stops, the tight stops are going to tend to be located in that area right there. Just to sort of debunk any mystery about it, you don't have to, when you're looking at your charts and you see the calls on the stops, you're going to, when you see them and you hear them, you're going to notice they're going to be, kind of right in there, the tight ones. The reason for that is that for traders who like to get in and out of trades and don't mind paying a little bit extra commission, they don't want to, they don't mind getting in and out. So you would have a tight stop here, and then as the market retraced, you get another entry down in here. So you're getting in and out, in and out, in and out. When you hear loose stops, yeah, this is the object trader box, Dave. So when we say region, draw a region, or we say draw a box, or something like box it in there, go ahead and box it in there. What we're saying is, what we're physically actually saying to do, and we're actually doing it, Gary and I are actually doing it ourselves, is we're going into the object trader tool over here. It's the panel over here, the tool. We click on region. We use our hotkeys. We place the region box. It pops up. It doesn't fit obviously right. You got to move it around. It pops up and it's sitting right here, close to where the current price action is. So maybe I should explain that real quick. So the region box pops up, and it's just going to be a little opaque box kind of sitting right there. So you have to do something with it. And what you do is you come and you locate the top of the candles where you want the top of the box to be, and then you locate the bottom of the box where you want the bottom of the box to be, and you hit enter. It turns a dark color. You know it's active. Now over here on your panel, on your OT over here to the right, you're going to want to make sure that all your settings are set up ahead of time, so you're not scrambling around at the last minute. That would be your targets, your stops, your trail stop setups, break even, plus minus, all that. All those goodies are all, in fact, you should all have that set up ahead of time, so that when you're in the heat of the moment trading and you're drawing the region box and you activate it, OT knows what to do. I mean, you don't want to draw the box and then come over here and start, well, should I have a 6-tick target and a 20-tick runner, or should I have a 4-tick scalper and a 30-tick, and you're messing around with your stops and all manner of things over here. You don't want to do that. Markets are moving too fast in the morning. Your tool's got to be ready to go. So what you want to do is leave yourself a little extra time in the morning if you don't have it set up from the night before. A lot of times I'll set everything up the night before. So when I get up in the morning, everything is ready to go. My charts are all set up. Data connection is good to go. And I immediately can go in and start looking for trade setups. I'm not monkeying around with the charts and all the tools. Okay, that's just a suggestion. You don't have to do that. If you don't do it the night before, allot yourself the proper time to do it in the morning. Okay? All right, so back to the stops real quick here. Generally speaking, the looser stops are going to tend to be down more located around the midband. Now, when you have long precipitous runs, and we'll look at this sell-off here, and I'll explain that more over here, how that works. But when this was pulling back here on this retrace, at the time it's happening live, you never really kind of know where it's going to pull back to. So generally speaking, the stopgap measure is kind of right around here. So we get a pop up, there's another trade entry, pulls back. Now let me ask a question here. We'll do a quick pop quiz to make sure everybody's kind of still awake and paying attention. Would you consider this area right here to be a good box or a bad box? Just type in a G or a B. So we came up, we can't get back to the high. I remember that. We couldn't get to 95, remember? We pop up a little bit more, we come down, and we sit just under the midband here. Is this a good G or B? Good box or bad? Would you box this in and take it? Or is this a bad box? G or B, where I'm circling the candles right here. G or B. Just look at it. I know, I don't have, just eyeballing it. Just eyeballing it. G or B, good or bad? Would you box us in and take this trade if you was sitting right here? All right, we got, interesting mix of answers here. We got a couple of bads, mostly goods. I understand boxes just below midband are good for longs. Yes, they can be, Peter, if the trend is up. All right, time's up. Now let's measure where we're going to put it, and then we'll draw the box, okay? So here might be the top of the box. These candles kind of right in here. So that's 76 or so, right up in here, 76. And you want to engulf the wicks. Okay, if you got bodies and wicks, you want to engulf the wicks as these are forming, and the bottom of the box would be here at 66. So you're right around 10 ticks. So if your answer was good, you were correct. This was a good box right here. Second part of the question. As this box formed at 7:20 a.m. Pacific, we were still in the live room and we took this trade. I took it. I don't know how many other people took it, but I actually took this trade. If you drew this box on the chart, would you go long only, L, short only, S, or let it trade both sides, B? L, S, or B? You drew the box. Now we're over here in Object Trader and we have to make some decisions. There's 3 buttons at the very top. Most of you have seen the tool and use it. There's three buttons, long only, short only, and then you allow it to trade both. L, long only, S, short only, B, both. That's the direction you're letting it trade when it takes a trade outside of the box. Look at the condition in the market. What would you do if you were faced with this condition tomorrow morning on, maybe you're not trading YM, you're trading some other instrument. Maybe you're trading ES, maybe you're trading 6B, gold, anything, and you have this condition. Looks just a chart. Here, let's pretend we don't know what happens. Here, let's pretend it's 7:20 in the morning, and you draw the box like this. L, S, or B, long only, short only, or both sides. In other words, you would let it take a short and you would let it take a long. B, that's both sides. Hey, Diane. Let me circle back and answer that after we go talk about this box. I'll circle back and answer that. All right, almost all of you said long only. There are a few of you who said both, and nobody put in short only. Okay, good. So I would say that the proper answer for what you're looking at here would be long only, L. However, a few of you have typed in, Mindy has said, it's still early in the morning time and we might want to let it trade both sides. A few of you have said that. No, Ed, I think you came in a little bit late on this open trade. Yeah, it's kind of you might have missed it. We were saying sometimes it's a crapshoot here. Okay, you don't know. Lately, for some reason, right at the open, they've been running the markets up and running the markets down. And sometimes you wind up getting 50, 60 ticks right out of the gate. Could be your one and done trade. This could have been your one and done trade right here. It went all the way from, I got in this thing, I think I got filled at 27 or 28 here. And I got way up here at 85 and I put, I can't remember, it's 15 contracts on it. So I made very good money right out of the gate there. Yeah, you're coming up on, in this particular condition, I believe the box I put on was long only in this particular condition. I'm not too concerned about missing a short trade just yet, simply because at this stage, the way it looked, right here, that this was going to be a bounce and a trend continuation to the upside. So for me personally, I would have just boxed this in. If you did, by the way, just as a side note, what comments are coming in, and hopefully this isn't too confusing, is that if you enable both sides to trade, if it was to break out of here in reverse, you would get a short trade. Now, the issue here is that, sometimes you will get the wick of a candle close below your box in an uptrend, like such. Fill you short when really you wanted to get long. The next candle closes up like this, and then the trend continues to the upside. Now you're stuck in a short that stops out, and you have to flip now to take the long trade. So that's the only risk, in letting, when the condition looks like this, where, you're stair stepping up, bars are blue, Background is green. You've come to the mid-band. We're expecting a long bounce pretty much here. Okay. All right. Okay, so we get back up, and we get back up, and I'm going to ask you a question. So we got Phil, we got a long trade. It's coming back to check the mid-band. And we made note of this live in this morning. I remember distinctly saying it, is what are you noticing going on right here? The fill candle would have been one of these right here, Dave. Long out of the box. One of these 2 or 3 candles, depending on exactly how you had it drawn. It was either the first, second, or third one. And if you had those engulfed, it would be the next candle right here, long. And we made note of this in the room. In fact, all the equities at this particular time did exactly this, more or less the same thing. Russell did it. NASDAQ did it. I believe ES did it. What's happening? And this is important to note this. You got to note it. You got to make note of it. If you're, some of you trade after hours, some of you trade pre-market. You've got, family commitments or jobs or whatever, and you can't be in the room the whole time. So if that's your situation, you got to be able to know what to do. Yeah, topping price action, lower highs. It can't get back to here. So what I'm saying, just to be clear explicitly about this, if this in fact was going to be trend continuation, shouldn't the price have done this? Either with this bounce, with this little short little bounce, and with this bounce up here, each consecutive time it could not get back to 95, first of all. Second of all, it did not break 95. So for these 3 attempts here, we are not getting trend continuation. What is this telling you when you see something like this? Let me help you out. Get one more little bounce. We come back to the mid-band. We don't get a bounce there. And it plows right through it. It's getting toppy up here. Okay, and just to explain what's physically happening in the market is the buyers and the buy programs are not kicking back in. So we all know that in a long uptrend, when we get a retracement, it is profit taking. Everybody who is short from long from lower levels is taking profits, and when profits are taking in a long trade, it has a natural tendency to push it down, backwards into support. And that's where we get our retracement trades. We're retracement traders, right? We draw the boxes, we use our tools, and we take retracement trades. We got a couple of them right here. Since it didn't get back to the top and it didn't take it out, we made note of that fact, and we became concerned that it might start to break down, which it did right here, taking out support. Now I'm going to ask a question here, and I'm going to be really interested to see how you answer it. Okay, here's the first question. I'm going to ask 2 questions, and I've covered this extensively in other webinars, and so I'm going to blow up the right-hand side of this chart, and we're going to look in detail at what's going on here, and we're going to have a discussion about a couple of questions around it. At this point in time, at 7:51 Pacific, has the trend changed on YM, yes or no? The trend is up, obviously. We know that. Had several trades we've been looking at here for the last half an hour or so, right? So it comes down here into this outermost band area. Has the trend changed? Yes or no? Y or N? I'm going to give you 10 seconds. You got to be able to look at these charts within less than 10 seconds and know immediately what you're looking at. Yes or no, trend change. Real simple. A Y or an N. You just hit the button. Time's almost up. Y or N? A lot of mixed answers here. Quite a few no's, but quite a few yeses as well. All right. Let me give you kind of a rule of thumb, okay? Because this is still a little bit confusing to some people, and I understand that. Generally speaking, the line in the sand from a trend perspective is going to be out here at the outermost band down here. If you come into this area and it bounces and comes back up anywhere, this would continue to be a buy area. As long as this held as support, you would be looking for bounces to take longs back up to the midband and above. And the reason for that is that at the time this is actually occurring, you know, you have to pretend you're looking at this chart in real time, right? You have to pretend that this is actually happening in real time and you're watching it. At the time it's physically occurring, we don't know if this is just a deep retracement on a leg up for it to continue, or she's going to break down and start to sell off, right? By the way, if you had drawn a third or fourth box here, did you get filled long, yes or no? That was a good little box there, by the way. That would fall into the good box category. Did you get filled long on that box right there, right at the midband? That was the 1, 2, well, starting over here, 1, 2, 3, fourth box of the morning. No, you never got long here. It just plowed through the bottom of it. For those of you that enabled both, you would actually be short on this bar right here. The ones earlier where I asked that question, long or short, if you had enabled both, you would already be short right there on that bar, close of it. But if you enabled longs only, yeah, no, you did not get long here. Never filled you, never broke up, ran out of gas. All right, in my opinion, at this particular point in time, sitting on the outermost band, we have not yet changed trends. Not yet. Okay, let me advance the chart a little bit. How about now? Has the trend changed now? Down here it's 17,830. Look at the price action, yes or no? Has the trend changed, yes or no now? Wire in. Look at where the price is. What's going on? What's physically going on? Yeah, yes, yeah. It broke support. So, you know, just to be clear about this, a rule of thumb is that as long as it stays above this outermost band, for the most part speaking, and there are exceptions to that, but for the most part, you're still in an uptrend. It's just a deep pullback. That's all that is, right? You could still be looking for a bounce. Well, it never bounced. It plowed right through it. Took it right out. You're getting a fresh swing low. Background has turned to red, right? Red bars, red stealth, mid-band, all the bands stair-stepping down. You are now in a downtrend, right? Excuse me. Well, technically speaking, two higher highs and two lower lows, it's really, that's sort of a little bit relative, Mindy, in the fact that where are you counting from? I mean, if you want to be really technical about it, you could have actually started counting here. 1, 2. I'm not going to do them all. You get the idea. 1, 2, 3, 4, 5, 6. And now you're breaking down here. I mean, you've got 6 lower highs and lower lows, yes? That's why I said this over here. That's why I was saying this over here, is that technically you're already getting lower highs, right? Right in here at the circle. Remember? Yeah, so when this breaks, it's just confirming what we pretty much thought was going to happen. When this was taken out, you have a trend change, no question about it. You're looking for shorts. So that's my final question on this chart, on this setup right here. Where are you going to take shorts? Right here? Hit the market sell button. Get OT up here. Market sell. Sell market right here. I'm getting in. I want to be filled right here. I hope I get filled right on that candle right there, because you know what? It's going to bust down and it's going to tank. I know it is, because look how much it's dropped. Market order. As it's wicking down here, market short, right? Anybody in here with me? Tell you what, it's shotgunning around. Let's load it up. Let's put 15 contracts short right here. I'm loading for bear. This puppy's moving. What do you think? Anybody coming in with me? Where's my OT? Get it on here. Let's do it. No, 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 absolutely not. That is the consummate no-no. If you are still stuck, you know, what happens is I know the psychology because I fought it for years. Okay, so if anybody understands the psychology, it's me. What happens is this. It's a mind game you play with yourself, okay? You know, I still have to fight it. At 22 years, I still have to fight it. All right. So you don't get your long, right? It's coming down here, the outermost band. You're thinking maybe it's going to bounce. Maybe I'll look for a little phantom bounce out there in that outer band. It plows through it, keeps tanking, coming all the way down here. So you're thinking to get short now. You see the background change. Bars are getting red. You know, stair stepping down, all the things that are telling us downtrend. You're watching it come and hit that 30, and you're like, now you're convinced. Now you're convinced that the trend is down, and you don't want to miss it. Okay, this is what's going through your head. I know. It's hard to fight it. I know it is. It's okay. You got to fight that tendency, because as we all know, what part of the move is this called? This is called the thrust part of the move. The thrust is where the market is pushing in the direction of the change in trend or trend. For instance, let's look over here on this move up. In very powerful moves where the buy programs and the buys have kicked in, you have this strong, powerful move up here, and then you have a retrace like that. This part of the move is called the thrust. This part of the move is called the retracement or pullback. Thrust, retracement. Thrust, retracement. You get the idea. Thrust, retracement, thrust, retracement. So in regards to this sell-off here, what part of the move is this? Down. It's the thrust. Yes? This is the thrust. So the rule of thumb is we never, ever, ever enter on the thrust move. Doug, I don't know that we called a bias on the box at the open. I don't recall doing that. I could, you know, I'd have to check my memory or talk to Gary on that. I don't think we had a longer bias on this box right here. Because let's go back and pretend it's the open of the market. In this current condition right here, it could go either way. So, you know, as I recall, I believe I had both long and short enabled on this box right here, right at the open. Because look at the current condition, Doug. You see it? You know, the background is actually red there, right? So, I mean, as far as we're concerned, it could have reversed and just plowed right down here like this. It could have gone either way. Now that he might have done that on the Russell. He was trading the Russell and he was trading crude. I was trading YM and I was trading NASDAQ. Yeah, I can go back and look at it. I don't believe I called a direction on the boxes on YM and NASDAQ. I could be wrong, but you know, he might have said that on the Russell. Yeah, he might have said that on the Russell. I don't recall. I was busy kind of dealing with getting NASI and YM going there. So anyway, okay, so let's go back and look at where we were here. Let's see, go back to where we were. Where were we here? Okay, let's go back. That was a good question, Doug. Yeah, I mean, you know, if anybody has any questions on anything that we're showing, even in the room, in the live room, you know, even if we're in live trades, we'll answer your questions. Don't feel, you know, if something's confusing and it's just not coming off right, or you don't understand, or what the heck we're doing, we will pause and definitely answer your questions. So please don't hold back asking those questions. Okay, so let's get back over here. All right, so here's the thrust part of the move down. Our background changes, stair step, the whole thing with red bars. Okay, good. Now, if we were going to short this, since we are retracement traders, where might we be looking to take a short? Keep in mind, it's dropped down here into this 17,830 area. I'm going to give you 15 seconds starting right now to type in where we all agreed, we've all pinky sweared, that we're taking a short trade. And we all agreed that we're not shorting the thrust. So if you're saying to me and the team here that you're going to take a short, then you should have some idea where you're going to do it, yes? That might have been true, Dave. Yeah, I think on, I don't know if it was YM or NAS. Let me go look at YM. 15 seconds on the clock. Let me go back and look on one of them. I think right as I was coming in the room, I'd just gotten into a trade. Let me see if that was, which one that was. Let me go back on NAS. I have NASDAQ right here. Stand by. Where are you going to short it? Okay, here's NASDAQ. Yeah, no, I think it was YM. You're right. Was that Dave? Yeah, it was right. I mean, I think I just boxed it and it had filled. I think, and I logged right in the room. I just was logging in the room and I had already been filled here. I believe you're right. Excuse me. I think NASDAQ came later because I'm looking at the NASI chart. That had a whole different appearance to it at 6:30. Okay, numbers coming in. Where are we shorting here? At 10 seconds left. I see quite a few good answers coming in. Most of you are saying mid-band. Okay, good. Wait for a trace of the mid-band. A range around the mid-band area. Good for you, Doug. The sweet spot between the stealth and the mid-band area. Mindy, perfect. All right, those of you who have been in many webinars before have typed in ranges, which is appropriate. And some of you are new, so it's understandable you might not think of it this way, but it's healthy to understand that a market, when it's retracing, can come into an area. Okay, we have shallow retraces that, like this one here, that only come back up to sort of around like where the stealth area is, right in here. That's a shallow retracement, right? Mid-band retracement comes right back up around the mid-band. That's sort of the middle of our little sweet spot area here. And of course, most of you know, like this one right here that we looked at, that we boxed on the long side, that the market can go just slightly above the mid-band, and we call that a deeper retracement. The deepest retracement, of course, is going all the way out to the outermost band, referred to many times as the phantom, which would be way out here. Right? All right, good. Most of you put in ranges, which is perfect. Some of you said the mid-band. That's fine. If you said the mid-band on your retracement call for looking for a short rollover, that's okay, as long as you understand that it's not always going to go perfectly to the mid-band, right? It's going to go somewhere usually around it. Okay, here we go. We're pulling back, checking 830, checking 830. We're breaking it. We've gone to a lower low. So did we get a short entry here? Did you short it? How about this right here? Is this deep enough for you, or did you miss it? You mid-band traders, was that enough retrace for you? No. Yes. All right, let's advance it. Let's go a little further. Okay, what's going on right now? Let's say you didn't enable both sides on the box, so you're not short there. That's just some hypotheticals. You were looking for a retrace up into here as it sat on 830, but you didn't get it, and you didn't get it. This was just too shallow, so you didn't jump in. But now you're looking at it. It's right a little bit after 8 o'clock, and the market looks like this. What do you think about this right here? What is this condition right here? What is that? Anybody? Right-hand side of the chart, right there. All right, if we took our opportunity box here from there and we drew the same box on this retracement we are examining here, the box would look something like this, yes? We drew analogies in other webinars to a pitching zone, a batting zone. You know, you're playing softball or baseball with your friends. You're at the plate. They're tossing a softball at you. You know, it's from your knees to your shoulders. Right over the plate is the strike zone. And where are these bars sitting right now? The sweet spot. Yellow bar probe right into Down the pike, 90-mile-an-hour fastball coming right at you, right down the pipe, right in there. If you don't swing at it, you're going to miss it. So some of you have already typed in, go ahead and put a box around it. Good, good. Now, in this particular box, now keep in mind we're after 8 o'clock now. Long only, short only, or both on this box right here, right in the sweet spot of our trade entry zone that we look for on retracements. Trend is down. Market's breaking down. Background is red. Stair stepping. The trend is down. We are looking for a rollover. Short, long, or both. 8:12 a.m. Pacific time this morning. By the way, and I'm going to give a bonus question for those of you who traded this morning. All right, time's up. Short only. Good. Because you're sort of getting a little long in the tooth as far as time's concerned. You're getting out of the first hour and a half. So when you're out of that first hour, hour and a half, especially 30 minutes where you let the market kind of go either way, when you get into that time zone, into mid-late morning and into the close, you pretty much are going to want to trade with the trend. If the trend is down, you're going to go ahead and just short only that box, right? Because there's no question about it. It could pop up here very easily into this area and then roll, and you're stuck in a long and you get double whammy because you stop out. Then you got to flip and reverse, take the trade to the short side, right? Good. Short only on this box. Okay, go into Object Trader, toggle off longs. Only shorts. Good. Chopping around the mid-band, chopping around the mid-band, rolls over, depending on how you drew your box. And you probably got filled. Well, one of these candles right here. It depends on if you engulf the wick. You know, if you engulf the wick, you probably got filled on this candle right here, short. Okay, bonus question. Bonus question. What else was going on at the time that this setup occurred? I'm going to leave that open-ended. Yeah, you would definitely want your stops, Mindy, to be out of the way of the mid-band there. I would think that'd be at least 12 ticks. Let's do a hypothetical. You got filled on the bottom of this bar right here, which looks to be about 829-ish, and 39 is right there. So yeah, 12 ticks would put you right above the mid-band, right up in here. Now, keep in mind, when the first bar closed and you got the entry, you did not get your scalp target yet, so it was not appropriate to move your initial stop, okay? Now, that changes when it pops down and hits that swing. You've got your scalp target right here. So it would be appropriate to look at starting to move your stops. Yes, most of you got that correct. This was oil inventory day at 8 a.m. Pacific. Now we know, we should know, or most of us know, that for the past, I'd say I'm going on 6-8 months now, almost a year, that crude oil price action and movement is very highly correlated to the equities. It didn't used to be that way. Remember, say go past like a year ago, back, you know, several years over the past, I don't know, 6, 7, 8 years. Occasionally they would be tied to each other. Mindy, you got to take off? Okay, no problem. This is recorded. We'll have it up on the web tomorrow. Yeah, we only got about 10 minutes left, so you're not going to miss too much. You caught the meat of it. Yeah, today was crude oil inventory at 8 a.m. All right, and we knew that in the room. We kept the room open a little bit longer to trade crude oil, right? And we know that there's this high correlation between the equities and crude. Crude was very close. It's rare that it gets this close. Very unusual is very close to the drawdown number that they projected, but crude sold off. Here, let me get the crude chart real quick. Where's the crude chart? Hold on. Let me show you what the reaction was at 8 o'clock, and then we'll come back and play this trade out. Stand by. By the way, this is and for those of you that do trade crude or anything that has commodities like nat gas, inventory numbers, anything that's correlated to news releases. You never, ever, ever try ever to have a position on when the news itself comes out, because that's a total crapshoot. You can get slammed really bad, even if you have stops and targets and tight all manner of things in. You can't protect against the shotgun because you really don't know when you're going to, where and when you're going to get filled. Here's 8 o'clock right here. Here's 8:01. So in the first minute of the news, all these bars shotgunned. Boom, 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 boom. I don't know. There's probably 60 bars in here, right? Shotgunning all over the place. Here's 8:02. 5 minutes later, it pulls up, and what do we get up here? I think we took this trade. I'm trying to remember. I think we actually did take that retracement trade. Or there was a box. Didn't we take a box over here? I can't remember. 8:02. I know we got part of this short. There was some box that painted. Anybody remember that? I think we had 2 minutes after the shotgun, and see how the market kind of paused right here? I think we did catch some of this right here. Didn't we? Anybody remember? Yeah, the 8:02 box, Doug, painted right there. Didn't we got this last leg of this push down after the shotgun, as I recall. Been so much stuff going on since then, I can't remember. But yeah, so if you miss this last leg, the 8:02 box, we kind of settle down out of the shotgun a little bit here. We get a nice sort of methodical short setup. We retrace. We get a nice box up here above the mid band, and then it rolls. And we just get a monster short because the thing just falls off the map. So when you see crude oil doing this, what are we thinking that the equities might do? Well, didn't it already sort of do it right here? It's already doing some of it, right? OIM tried to break down. There we go. It's finally breaking down a little bit. Then you get another short trade setup and another short trade setup. Several short trade setups all the way over for the rest of the big chunk of the morning, huh? Let's look where did she bottom out down here? All right, 5-second pop quiz. Good box, bad box. G or B? Right there, 8:17, 8:15. Good box, bad box. Yes or no? G or B? Right here. 5 seconds. 4, 3, 2, 1. Time's up. Good box. How about here? You see this setup in the morning. Good or bad? 5 seconds. Tell you what, I'm going to go and I'm going to see if I can find a bad box. We've had a lot of good boxes here. I'm giving you layups, kind of tossing the layups. You got Kevin Durant standing underneath the basket with nobody around him, and you lob the ball up to him. That's a gimme, right? By the way, they had a big reception here today for him. Huge. Oracle Arena. Oh, jeez. Big deal. He actually signed his contract today, by the way. $54 million for 2 years. Not too bad if you can get it, huh? Let me clean up this chart real quick here. Not too bad of work for 2 years, huh? 54 mil in the bank. Of course, he makes more than that on endorsements. No, I was reading 30 million on endorsements. All right. Let me ask a question here. Is this a good box or a bad box? Let me get the predictors off. Ready? I'll give you 9 seconds for this one. G or B? Right here. Good box or bad box? Just one letter. That's all you got to type in. One letter. If you see a chart and you're trading, you know, and you see a chart that looks like this, should you box this in, yes or no? Four seconds. G or B? It's good or bad. Would you box it in, yes or no? That's the bottom line. Would you put your live capital at risk in a condition that looked like that? Two seconds. No, time's up. Bad box. No, 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 no. For multiple reasons. Some of you actually typed this in. The main reason is the size. Our rule of thumb is 10 to 12 ticks max. Now, depending on where you draw the top and bottom of the box, I mean, conceivably it could be either here at 49 or down here at 48. Okay, either one of these two if you want to have to engulf the bottom. And then the top would be all the way up here at 53, arguably as far as 54. So let's take the inside box. Let's say 49 to 53. Let's just use round numbers. That's 4 times 4 plus another tick or 2. Yeah, you're between 16 and 20 ticks. You know, depending on whether it really is a function of how far down you want the bottom and how far up you want the top. You know, whether you want it there or all the way up here. Anywhere between 16 to 20 ticks. This is not a good box. Okay, this is a perfect example of a very bad box. What, in addition to the size of it, what is the other concern? It's floating up here in no man's land above the midband, isn't it? Let's look and go find another good one. I see a couple of 3, 4 good ones here. So let me ask you this question. Just ponder this for a second, okay? And I'm just going to draw a couple of things here while you think about this. Why is it that these small little boxes located at or around the midband are such good boxes, whereas something like this over here is a bad box? Why is that? Why do we consider these bad? I know we have the rules and the sizes and all manner of things like that. I understand all that, but I'm saying why? Why? Why is this? Why do we call this one bad, and why are these 3 good? What's the rationale? What's the reasoning behind why? Think about it for a second. We all know the difference physically in the size of the box, so that's not it. Okay, that's not it. That's not the proper answer. Why? There's a reason why. Think about the reason why you have good boxes on the left, those 3 down there at the midband, and the one to the right. Give you a couple of more seconds. I see some good answers coming in. It's in a range, better consolidation. That's a good answer, David D. People don't agree on the price. There you go. That's what I was looking for. Doug G nailed it. Let me tell you what he said, and there's several different ways to phrase it, but I think he put it pretty well. One is compressing, building energy. So here's what's happening, okay? Think of it this way when you see these boxes. When you see one that looks like this, any one of these 3 right here, okay, this one, you know, any one of these right here where you're sitting on the midband and the bars are just very tightly packed together. Think about taking a spring and compressing the spring down really tight till it's almost all together, yes? Now, when you release that spring, what's going to happen? Yeah, it's going to shoot and go all over the place, right? Spring, it's coiled. Compression building. That's what's happening inside of these boxes. Compression is building. You're going to get some kind of movement come out of it. It's going to happen. It's not going to stay like that forever. Now, when you contrast it with something that looks like this, what's happening in here? Is this spring-like action? No, this is just pure indecision. Market can't decide what it wants to do. The buy bots are fighting the sell bots, and it's stuck in a melange mess up above the midman, floating in no man's land up there. Here's the other reason, and this is probably the most important one, is many, many years ago, in fact, if you remember, the old scripts used to have breakout in the name, remember? Remember the old scripts? We don't call them that anymore, but we used to. Is that this is called a breakout trade. So in other words, you're looking for the market to break out one way or another from here, yes? most likely up since the background's green and stair stepping and all this, so we're in an uptrend. But theoretically, what could happen is what? What do we call these? What was those things we used to get caught in all the time many, many years ago? Remember? Anybody remember what these are called? You might have been stuck in them. What do breakout traders get stuck in many, many times? What's that called? Anybody remember? We don't do it anymore, so nobody might remember what it is. What is this called when a market does this? Anybody get it? A fake out, a head fake. Good, Peter. You must be old school. This is called a head fake. How many of you have had these big, large consolidation boxes like this? You put a buy order here and a sell order here, and you're looking for a breakout, yes? You get a bar, wick or close up like this, only to find out that the stupid thing closes back inside this big old range and then goes down and tanks and goes the other way. Or even worse, it comes down and then breaks the bottom like this, closing here, filling you short. So you stop out, you're up in here, you're stopped out, you're feeling some pain and heat. You say, oh, well, for sure this thing's going to tank. And it comes, closes out here, goes back and does the same stupid thing. And you get head faked all over the place and get whack-a-mole 2-3 times and you're upside down. We don't do that anymore. You don't want to do that. Excuse me. That's why it's very important to understand the difference of what is a good box and what is a bad box. And we got to think of it as it's got to be at or around the mid-band. It could be, excuse me, hold on. Now, there are cases, of course, when a market is trending very precipitously in a direction and you get a slight pullback and then it consolidates and it's not necessarily right on the mid-band, but it could still be a good box. So it doesn't have to be on the mid-band. What we're saying is the most ideal condition is right on or around the mid-band. That's the most ideal condition. But there can be other places where it happens to get you in. You get a little pullback here to a higher support level and you get in. That's perfectly acceptable. However, the alternatives to region boxes outside of the midband is to go ahead and use that ray or line tool to get in instead of a box. There's several times where a ray or a line tool is more appropriately warranted over a box. So we say box a lot in the room, but the fact of the matter is there's lots of other tools to use, right? Does everybody understand the difference in concept of what we're talking about between the tightly coiled box and the loose breakout box that we try to avoid? Everybody understand that? Any questions on that? Now, eventually this did break up. It pulled back slightly back into your breakout traders would have been filled, long in here, and you did feel a little bit of heat. Pull back in the box. You might have sweated that a little bit, and then it started. Well, this is right now starting to continue to. Didn't give you much. Excuse me. You were filled right here. I don't know. Maybe you got 4 ticks in it. Of course, the market's not moving right now anyway. But all right, I'm going to go ahead and wrap. Final questions. Final question.